All right, everybody. Chris is about to ask me a controversial question, and I don't know what it is. And she's on the other side of the camera because she's shy and
Hi.
doesn't want to be in the picture.
Sorry.
Here we go.
Okay, Chad, do you think some people are meant to be renters? Some people out there are not meant to own a home.
Ooh, boy, that's a tough question. A very tough question. I don't want to say that people are meant to be anything, but I do think that there are some people that are better served renting than owning. Owning a home is a certain, not only is it a benefit, but there's a certain responsibility to it. There's a lot that goes into owning a home, and if you're not prepared for all those additional responsibilities, then maybe renting's a better choice for that particular individual. So I wouldn't say that people are meant to rent. I'm sure some people do say those things, but until you have the certain, maybe say, skill set and or responsibility, then maybe renting's a better option. Is that a nice politically correct answer?
It may be a little biased because you're a mortgage lender, but
True, true. Well, and I don't want to put anybody into a home if they're not ready for it, right? Like that's not a good situation for anyone. So yeah.
if somebody applies with you, what are some indicators that they're not ready to own a home yet?
Well, I mean, I think if it depends on who you follow for your advice, but I'm one of those people that I'm a big believer that I want people to have some reserves. I don't ever want to put somebody into a home with nothing to fall back on, especially if it's an older home. I would hate for somebody to buy a new home, move in, AC goes out, and now they have a really big repair that they really can't afford to fix. So I like people to have, 2 or 3 months worth of reserves, and we say 2 or 3 months, we're talking about if their monthly payments, $2,000 a month, then we want to see them have $4,000 to $6,000 in savings after they close. But that's not the case for everybody. Not everybody falls into those circumstances, and it doesn't mean that they shouldn't own a home. But we look at 3 things: income, assets, and credit, and I like to see that the client has a nice mixture of all 3 of those things.
Okay, so let's say that maybe you have some younger folks apply with you and they haven't had time to build up that credit and they haven't had time to build up their assets yet, but they have a nice cushy job and they could afford to buy a home. What do you normally recommend to those kinds of folks?
Yeah, again, I think it's one of those, there's exceptions to every rule, right? And like you say, a nice cushy job. So when I hear that means to me that in all likelihood, their debt to income ratio is pretty low. And they're likely going to have some extra savings as time goes on. As long as they're not buying a house and their debt to income ratio is 50, 55%, something like that, and they don't have lots of disposable income, then yeah. And again, it's not necessarily my place to tell people what they can and can't do. I just tell them what they're qualified for and what they're not, and then I try to give them the best advice that I can.
Okay, if some younger folks apply with you, they have, maybe they're fresh out of college or something, but they have good credit, they've worked on it, they do have a nice cushy job, so they're going to have that income coming in, but they haven't had time to save up enough for the down payment. Yeah. Do you normally have alternatives that you recommend to them if they're really they really want to buy a house right now, like they don't want to rent?
Yeah, of course. I mean, there's lots of different scenarios for people. The most common thing that we see is family members usually want to help each other out, and they want to help people buy a home. So we see lots of gifts. Gifts are a great source for younger people who don't have that savings just yet. So we see gifts, or maybe it's somebody that's been on a job for a while, and the only place they've saved is in their 401k. They can always borrow against their 401k as well. So we look at the whole picture, and I ask those questions. If somebody's tight on their funds for closing, that usually is the biggest impediment to buying a home, is the down payment and closing costs. And so we'll ask those questions. Do they have a family member that might be willing to help them? Do they have some retirement funds that they haven't shared with us? And oftentimes we uncover those things.
All right, last question.
Okay.
What do you think the one biggest benefit is to owning a home?
The one biggest benefit.
Just one. I'm sure there's lots.
Just one.
But
well, I think the deal is you own something, so you're beginning to build equity. It is the number one contributor to generational wealth. And so the sooner you own a home, the sooner you start that process. So building equity in something is a big deal, and having that as an asset. And it's not uncommon for me to have clients come to me that, start families and raise kids, and they get so busy with life, they don't save in other places, but they've been building up this equity in their home, and their home becomes a financial asset that they can use to fund college education, pay off other debts that they've accumulated over time. So yeah, absolutely, it's a great wealth generator over time.
Thank you so much for your words of wisdom, Chad. We appreciate it.
Happy to do it. BW, see you later.